Make money with price action trading. Hello, guys. Welcome to Stacking Stocks, and thanks for joining us today. Before we begin, let's quickly recap our last session. What were the headlines? In our previous session, we discussed the top 15 most expensive NFTs ever sold. Have you ever considered investing in NFTs? Look up our last session on our wall to find out more about NFT sales. In today's session, we'll discuss how to make money with price action trading. What do you know about price action trading? For starters, what is price action? Is this new to you? You're probably wondering what we're talking about. Price action refers to the characteristics of a security's price movements. The movement is often analyzed with respect to price changes in the recent past. In a nutshell, price action is a trading strategy that allows traders to read the market and make subjective trading decisions. Isn't that remarkable? Are you a trader? Imagine making decisions based on the recent and actual price movements rather than relying on technical indicators only. Price action gives traders an accurate representation of the market as it is. You won't have to rely on inconsistent predictions and speculations regarding price action trading as a trader. How does a price action trading technique work? What's the differential in the strategy? It depends on technical analysis tools. The method focuses more on recent and past price movements as opposed to fundamental analysis factors. As a trader, what do you think matters most? Fundamental analysis factors or technical analysis tools? Price action trading analysis tells you how the commodity, currency, index, or security will perform in the future. If the price action assessment indicates that the price is about to rise, you can decide if you want to take a long position. On the other hand, if you believe that the price will fall, you can short your assets. Do you now get the concept of price action trading? We still have more to share, so just sit back and relax. To comprehend price action trading, you need to look at patterns and identify the key indicators that could affect your investment portfolio. For many day traders, price action trading is the quickest way to generate profit over a short time frame. Are you interested in day trading? What do you think this means? In this case, it means that day traders look for a simple breakout from the session's high, enter into a long position, and use strict money management strategies to generate profit. Before engaging in day trading and relying on price action strategies, you need to understand the trading strategies and risk management techniques. Most people are often quick to jump on opportunities just because returns are promising. As much as price action trading offers you great results, you need to comprehend how it works first. Many traders employ several price action methods to predict market movements and make short-term gains. The tools applied will depend on the trader's choice and strategy fit. You'll choose what suits you perfectly. Since price action trading looks at recent historical data and past price movements, what do you think are the tools taken into account? We mentioned that price action is dependent on technical analysis tools. Well, what are some of these tools? They include charts, high and low swings, price bands, technical levels, such as support, resistance, and consolidation, and then also trend lines and many others. The tools and patterns observed by the trader can be simple bands, breakouts, channels, complex combinations involving candlesticks, price bands, price bars, trend lines, volatility, among others. In price action trading, the behavioral and psychological interpretations and subsequent actions you make as a trader are also considered. For example, no matter what happens, if a stock hovering at 580 crosses the personally set psychological level of 600, then you can assume a further upward move to take a long position. But this all depends on how you expect the price to shift. If you anticipate a price increment, then the long position suits you. However, other traders may have a divergent view. Such traders will assume a price reversal once 600 is hit, and hence take a short position. What are we trying to say? Two traders won't interpret particular price action the same way. One might assume a price rise, while the other will anticipate price reversal. We're trying to say that each will have their own interpretation, defined rules, and divergent behavioral comprehension of the price movement. However, when it comes to technical analysis, for instance, 15 DMA crossing over 50 DMA, there will be similar behavioral and reaction from multiple traders. In this case, they'll assume a long position. What do we mean? In simpler terms, price action trading is a systematic trading practice assisted by technical analysis tools and recent price history, where traders are free to make their own decisions within a given scenario to take trading positions as per their subjective, behavioral, and psychological state. Do you think price action trading strategies will work for you? Who wouldn't want to be free enough to make their own decisions? We're not saying that price action trading eliminates the prediction and speculation element entirely. It's just that in price action trading, there are technical analysis tools that aid the trade. We'll find out shortly who uses the price action trading strategies and the steps applied in price action trading. Price action trading is an approach to price predictions and speculations. Who would really need price action strategies? It's often used by retail traders, speculators, arbitrageurs, and even trading firms that employ traders. Do you fall within any of the mentioned categories? You can use price action trading for a whole wide range of securities. You're not restricted to a specific category. It can include bonds, commodities, derivatives, equities, forex, and many others. Let's now move to the price action trading steps. Are you an experienced trader interested in price action trading? Most professional traders following price action trading keep multiple options for recognizing trading patterns, entry and exit levels, stop losses, and related observations. Does this mean that it's not safe to rely on one strategy alone? Having just one strategy on one or multiple stocks may not give you satisfactory trading opportunities. You'll need more than one technique to achieve the sufficient results that you're craving. There's a two-step process involved in most scenarios. The first step is identify a scenario. What should you look out for? The scenarios could be a breakout or a channel range, a stock price, getting into a bull or bear phase, or any other relevant factor. The second step is identify trading opportunities within that scenario. For instance, there are two likely opportunities once a stock hits the bull phase. It may overshoot or retreat. This is a completely subjective choice. What would you do in such a scenario? Different traders will have divergent perspectives as much as it is in an identical scenario. Let's look at a couple of examples that clearly highlight the price action trading steps. What happens if a stock reaches its high as per your view and then slightly retreats to a lower level? Well, in this case, we already have a scenario. What's the trading opportunity? It'll be up to you to decide whether you think the price will increase or drop further. Here's another scenario. The trader sets a floor and ceiling for a particular stock price based on the assumption of low volatility and no breakouts. If the stock price lies in this range, scenario met, the trader can take positions assuming that the set floor or ceiling acting as support or resistance levels, or take an alternate view that the stock will break out in either direction. For the case scenarios, you can see that technical analysis tools are essential in price action trading. However, the financial trading decision is upon you as an individual trader. As you can see, there's the flexibility offered instead of having a strict set of rules for you to follow. Are you looking for short-term or medium-term limited profit? Price action trading will suit your needs. On the other hand, a long-term investor can't thrive within price action trading. According to most traders, the market follows a random pattern. No definite and systematic strategy will always work. There are a lot of theories on what strategies will work best, but remember, there's the survivorship bias. At the end of the day, only the success stories come to the limelight. What can we advise you? Understand, test, select, decide, and act on what best suits your needs. That's all we have for you today. Once again, thanks for joining us today here on Stacking Stocks. Don't forget to like, share, and subscribe. See you next time.